Welcome, everyone. Welcome to the second season of TAKESTOCK Live. Starting on August 12th, that's today, we'll be running Mining Mania every Wednesday, 15 minutes after market close, and that should run through into October. Next week, we have a special episode, Word on the Street, where you'll be hearing from a number of our close associates. I believe it's MNP, Fasken, and Lead, hearing their words of wisdom on what they've been facing and where things are heading next. Thank you to the TMX Group and the TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize our sponsors, Fasken, MNP, Lead Jones Gable, Olympia Trust, and the Canadian Securities Exchange. Thank you to them for helping us get the ball rolling back in 2014 when we founded TAKESTOCK Investor Series. We'd also like to thank our supporters. In this case, Calgary Meg and CIM, the Manitoba Saskatchewan Prospectors and Developers, Sterling Capital, Conduit IR, CHF Capital, and many others. Special thanks to Investmentpitch Media and to the Newswire for helping us get the word out. And at this point, I'd like to call upon my colleague, Mark Francis, to take it away. Thanks, Mark.
Thank you, Raj, and welcome all of you, our attendees and guest presenters. First of all, housekeeping matters. Our disclaimer: this presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TAKESTOCK, and TAKESTOCK and its principals, Raj Joshi and Mark Francis, yours truly, may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. You will note a red Reconnect tab at the top of your screen. If you lose audio, just click it and you will be reconnected. Normally we run just under 45 minutes, and the chat board will be available for asking questions. Please be clear about to whom your question is being addressed. And please use the chat board only for serious investor and technical questions. Today, we have 3 gold companies at various stages of the exploration and development cycle. Each company will have a presentation with their PowerPoint, followed by a panel discussion with Q&A. We encourage you to do your due diligence, go to SEDAR, and connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website, takestocklive.com. So the 3 with us today are Grant Ewing, CEO of Rockridge Resources, ROCK on the TSXV, Murray Nye, CEO of Winston Gold, WGC on the CSE, and Tom Atkins, CEO of Mammoth Resources, MTH on the TSXV. Let's start with Grant Ewing of Rockridge. Grant Ewing is a professional geologist with a BSc Geology from the University of Calgary. Recently, he was president and CEO of Kiska Metals, 2014 to 2017, until it was acquired by Orico Metals, where he continued as vice president exploration of Orico until it was acquired by Centerra Gold. Prior to that, he was president and CEO of Acadian Mining, 2010 to 2014, until its sale to an international mining company. And he has more history than that, but we're going to let him get right into it. Grant, take it away. You're welcome to bring your video on, Grant.
Okay, there we go. Well, welcome everyone, and thanks for attending this presentation today. As mentioned, we'll be utilizing some forward-looking statements, so please be aware of that. So Rockridge Resources is a relatively new public mineral exploration company. We're focused in world-class mining jurisdictions with proven geologic potential and jurisdictions that are favorable in terms of social and political business. Our core gold asset is the Rainy Gold project located in Ontario, and our core our other asset, our secondary asset, is the Knife Lake project. It's a copper project in northeastern Saskatchewan. Rockridge is led by a high-quality team with technical expertise, and we're well financed to continue and with our exploration of our projects. Our management team and board are listed here and on the next slide. So overall, we're well represented by quality individuals, collectively a lot of history in running successful mineral exploration companies. Rockridge has 50 million shares outstanding, a market cap of about 10 million Canadian, so quite a small market cap. We're well financed with just under 2 million in the treasury, and management and insiders own about 20% of the stock, and some of the other notable shareholders are listed here on this slide. So I'll get right into our Rainy Gold project. This is our core focus. It's a high-grade gold project, early stage project located in the Swayze Greenstone Belt, and this is a sub-province of the world-famous Abitibi Greenstone Belt, which hosts several world-class deposits in the Timmins and Kirkland Lake gold camps. This project has excellent access and infrastructure. You can drive to the project in under 2 hours, and you can see there's a lot of other activity in the area. We've got Newmont with its newest mine, the Borden mine, just to the west of us. They opened this mine last year. Production from that mine, that underground mine, is trucked up to Timmins and processed at the Porcupine Mill. And then off to the southeast, IAMGOLD has a large development project with its joint venture partner. And just recently, they announced a development decision there. So it'll be a 7 million ounce reserve open pit project, which will be quite a major project for IAMGOLD going forward. And what we're doing at our Rainy project is following up on success that we had with the first drilling program we conducted earlier this year. We had a highlight intercept of 28 grams per ton over 6 meters uncut. And this was in return from hole 6 of a small program, and really the first time anyone had looked at this project in over a decade. So historically, the drilling done on this project is shown here. So just over 5,000 meters and 40 holes is the total drilling done here. So we've just really scratched the surface. It's an early stage project with high potential for new discovery. This is a plan view, so a bird's eye view of the project. So we've got 30 square kilometers that we have staked and own outright. There's a small NSR royalty due to the prospectors involved in the early days. Just to the west of us, we butt up against Newmont's Borden claims. And you can see the area marked with 2020 drilling here is where all of the historic drilling plus our recent drilling has been conducted. So just over about 225 meters of strike length and all shallow drilling. And what we've discovered here or followed up on is gold in high grade quartz veins, or gold in or lower to higher grade gold occurrences in these quartz veins. And historically, it was really hard to tie these veins together. But with a lot of recent work and assessment of all the data, we've now defined this corridor marked on this map, which can get up to 50 to 75 meters wide. And within that corridor, we have an increase in quartz veining, and that's where we find the gold mineralization. So our first steps with this project were the initial program to try to further understand the geologic setting. And now we're going into phase 2 drilling here, and we'll test down plunge of some of these high grade intercepts we drilled off earlier. And we'll follow to the northwest along strike where no drilling has been conducted along this corridor. This next slide shows the results of a drone magnetic survey we conducted just this past month. And this really outlines this horizon that hosts the mineralized structure. So it's a low magnetic response that's coincident with our mineralization at Rainy. So this will really help us trace the prospective horizon along strike to the northwest. Several hundred meters are open with no drilling. And then you can see the horizon bend steeply or sharply to the southeast. So that'll also be drill tested with the upcoming program. Here's some visible gold and core. This is what we're all chasing when we do this gold exploration. This is the intercept that ran 28 grams per ton over 6 meters. The first part of the intercept was a 3 gram hit, followed by some lower grade and then some spectacular coarse gold in a quartz vein. This is open down plunge, so this will be tested with the current or the upcoming drill program. And a long section of the Rainy project is shown here. So we've got our high-grade intercept we drilled off this past March, and then historically there was several other high-grade intercepts that weren't followed down plunge. So we'll test all of these with the upcoming drill program and look to expand this mineralized system at depth. This project is very well located, excellent access and infrastructure as noted, so we can drill all in for about $500,000 here. And then we're well financed, so should we have success like we expect here, we can carry on following that. And just briefly, so that was our Rainy Gold project. Briefly, we've got a second asset in this company, the Knife Lake project. It's a significant copper resource near surface identified, and we've got excellent potential for new discovery here. So in the coming months, we'd look to get back into this project and drill some of the high priority targets outlined here. And I'll just move ahead because I see I'm running shy of time here. Just to summarize, Rockridge, we're a microcap company, 2 high quality projects. We're just embarking on a drill program on our high grade gold project. And really the value driver for us is new discovery. Drilling success we think could result in a nice re-rating in our stock.
Thank you very much, Grant. And now Murray Nye, Winston Gold. One claim to fame Murray has is that he and I shared a floor in the same office building in Winnipeg, but he's CEO of our explorations and has helped a large number of companies become public in both the mineral and technology space, including now NASDAQ listed Expel. So very pleased to have Murray Nye with us. All yours, Murray.
Thanks very much, Mark. It's a pleasure to be here. My little bit brief history of why we're in Montana. I had the good fortune of meeting up with a guy. I was him and I were on the same board of another junior mining company. His name was Mike Gunsinger, who was a mining legend in Canada. Actually helped put Barrick's first mine into production, the Renabi gold mine. And I asked Mike to help us with a gold project, and he directed us to Montana. And he said that he did a lot of mining down there and between 85 and 93 and saw a lot of very high grade gold projects. So what we did was we started a company called RX Exploration and put the historic Drumlummen mine back into production at the rate of 400 tons a day. And if you don't mind, I'll use ounces per ton at 0.4 ounces per ton. So it was a pretty exciting and successful operation. So we lost the company in a proxy battle, so we came back and we started again. And this is in an area 25 miles to the southeast of Helena, Montana, called in the Winston district. Let's get to move ahead a few of the slides here. One of the things I talk about is our board of directors and major shareholders in the company. One gentleman I'd like to highlight is Joe Caraba. He's our executive chairman. Joe recently retired from the board of Newmont. He was with Newmont for 10 years, chairing their sustainability and safety committees. I had the good fortune of meeting Joe in 2017. Asked him to take a look at the project. He said I'd meet you on the property. So we met in 2017. Like what he saw, the lab on site, had a lot of infrastructure for a little company like ourselves. Liked the area, particularly liked the grade we were mining, and being on Newmont's sustainability committee, he liked the jurisdiction we were operating in and the infrastructure that was in place in that area. Subsequent to that, Joe owns about 17% of the company. He's contributed about $3 million of his own money in purchasing stock in the company. Other members of the board are myself, Max Polinsky, who was my partner since 1994. He was also the CFO of RX Exploration. Dave Whiteley is our mine superintendent. Dave worked with us at Drumlummen, very capable guy. We've got another gentleman on as well, a guy named Tim Hunter. Those were 2 key people we had operationally at RX, and I give them along with Mike, a great deal of credit in the success of actually starting a mine up. Rounding out the board, we have Stan Stewin, who's a CPA and a CA. Ben Porterfield was our geologist at RX. He's on our board here, and he's the guy that found this property for us. in the Winston area, and Al Fabro is another director who has a lot of experience financing junior mining companies. What we have is a high-grade, narrow vein gold project. It's in a located mining district. We have most of the claims are on patented ground. It's a very friendly permitting process in the state in regards that they allow you what's called a small miners exclusion. What that means is you can start an underground operation as long as you don't disturb more than 5 acres on surface. And that's how we operated the Drumlummon mine initially, and we were moving towards a full-blown mining permit at that project as well. We've got a lot of potential. Historically, there was 740 holes put into this. We have data on about 650 of them. It was drilled by Phelps Dodge, Western Energy, and a few others. They were trying to establish an open pit in that area, but we had lots of high-grade intercepts from those from that drilling that gave us some clues on where to start. We've got what I like to say, and what Joe was very impressed with, is the infrastructure in place. There's a major highway within 3 miles of the actual mine site, and getting into the mine site is a very good highway or road, municipal road. So we get to the mine very, very easily. The miners like it. They can live in Helena or they can live in the Winston area, and it's easy for them to commute. We have jet service into Helena, and it is the state capital of Montana. Historically, the grade on the Custer was 1.5 ounces per ton. At one time, 2,400 feet of continuous strike. It was one of the longest mining veins in the world back in 1890, 1900. This gives you an overview, a plan view of the initial development we've been doing. We've got 4 targets there. We've been focusing on 2 of them in particular. One's called the Block 93 and one's called the Parallel. From that historic drilling that was done, we had a very good, about 4 or 5 good intercepts into an area called the Parallel vein. And Ben Porterfield really liked it. It showed about a 4 to 5 foot wide vein running about 1/2 ounce or better. We decided to see if we could duplicate some of the drill holes. We were successful on doing that. On the way down, we hit another vein called the Block 93. So while we were drilling, we were actually hitting 2 veins with 1 drill hole. This is a little closer view of that. You can see the proposed access, which has been completed now. It's called the Corraba Tunnel. You can see the Parallel vein and the Block 93 vein. We have approximately 600 feet of strike on Parallel by about 300 feet vertical. And on Block 93, we have about 480 feet and roughly 240 feet of depth on that. There are some of the high-grade intercepts running up to 1.75 ounces per ton. We've got the similar kind of results into Custer. And we have other veins. And right now, I think what I'd like to highlight, I don't know how much time I have left, Mark, but what I'd really like to...
You're out of time, I'm afraid.
Okay. Just very quickly, we're starting a test mining program this month. And I'll part with that. Thank you very much.
Very good. Thank you, Murray. And closing up the formal presentations, Tom Atkins of Mammoth. Mr. Atkins has a degree in geology, an MBA, and 5 years field experience in mineral exploration and mine development before he became Director of Investment Banking, one of the directors there for CIBC World Markets, participating in raising over $1.7 billion in equity and debt for small to large cap companies. He also was formerly the CEO of Rockridge Limited, Castle Gold Corp, which he took to being a listed gold producer on the TSX, acquired by Argonaut Gold, and previous to that, Crowflight Minerals. Delighted to have you, Tom.
You toggle your mic on, please.
Is that better?
Yes.
Can you hear me? Yeah. Thank you, Mark, and thank you for those attending the presentation. Just going to launch into things here. So just as far as some quick facts on Mammoth Resources. So about 40 million shares outstanding, 42.5 fully diluted. Our 52-week high-low is 5.5 cents, 2 cents, and our 10-day VWAP would put us at about 4.5 cents, giving us about a $1.8 million market cap. Mark's introduced myself. The four of us, directors and officers, are the core of our management group and directors, and that we comprise about, well, actually over 100 years of mineral resource and mining experience. I think everyone knows that gold's been on a tear the last couple of months. Had a little bit of a pullback yesterday, but again, it's rebounded today. I just want to point out, we talked about our $1.8 million market cap. About $45,000 of buying right now, looking at the bid ask, would move our share price from this 5 cent to about 10 cents a share. So it doesn't take a lot of buying to significantly impact our share price. Another glimpse of valuation is that our Tenoriba project has had Canadian $5 million spent on it. We have an option agreement with Centerra, where Centerra is optioning Tenoriba. And if you looked at the valuation implied by their expenditures, it values Tenoriba at Canadian 5.9 million. And so the combination of those two, our market cap is actually about a third of what actually has been spent on our Tenoriba project. Just a quick glimpse at the Centerra option agreement. So Centerra is earning a 70% interest. They'll spend Canadian or US, close to US $10 million, close to Canadian 14 million, over a 7-year period, of which a year and a half has already passed. Of course, those expenditures can be advanced or accelerated with success. The first tranche, they spend US $5 million to earn, or Canadian 7 million to earn a 51% interest. And then the second tranche, they spend another US $4 million, close to Canadian 6 million, to earn the remaining 19% of that 70% interest. There's also US 900,000 or Canadian 1.2 million of payments to Mammoth during that time frame. So the deal was signed with Centerra late 18. Centerra hit the ground, intent in advancing exploration in February of 19. Ran into a little bit of a hurdle with community consultation efforts, which had them out of the field until actually February of this year. Nothing serious. It just took some time. A new party, a Canadian $5 billion party in the area, and so their requirements to consult with the community took about the same time as it took us initially. 2020 March, they were doing exploration. And unfortunately, that got curtailed due to COVID for a couple of months, back in the field in May, and wrapped things up mid-July due to the rainy season. So they're intending to go back into the field mid-late September with the intention of drilling. They've actually applied for their drill permit, looking at drilling up to 70 drill holes. I'm going to talk a little bit about the Tenoriba project now. And one thing I want to really leave you with is just the extent and the ubiquity of gold mineralization over a really large area, at least 15 square kilometers. So we're in the prolific Sierra Madre gold belt. Remember Humphrey Bogart, treasurer of the Sierra Madre? In 2015, a study was done, and the Sierra Madre at that time hosted about 95.6 million ounces of gold resources, gold equivalent resources, 69 million of silver and 69 million of gold and 2.6 of silver. This is showing Chihuahua State, and you can see Tenoriba in the lower left-hand corner there, the southwest corner of Chihuahua State. Our predecessor spent $2 million on the property. We spent $3 million on property, a total of 26 drill holes, of which 17 of those drill holes are potentially economical. This shows our 5,300 hectare concession. This is zooming in on that area, showing 3 principal target areas. And now I want to show you, I talked about the ubiquity of the gold mineralization. You can see this is a 5 kilometer by 3 kilometer trend. And these are soil samples. This is gold in soil. These results, anything in the orange to red, being anywhere from 50 to 100 times higher than anomalous gold in soils over this large 15 square kilometer area. This is some of the historic drilling, and you can see some of the highlighted intersections, 1.9 meters of 45.9 gram per ton gold, followed by 11.5 of 2.25, 34 of a gram. This is some of the work that we did. We took over 600 chip samples, and each one of these squares is actually 2 kilometers by 2 kilometers. So this is about an 8-kilometer strike length. The red squares are anything from 10 up to 74 gram per ton gold. The sort of amber color are from 1 to 10 gram per ton gold. So you can see the ubiquity of gold mineralization over this very, very large area. Gold occurs as free gold, so it could be amenable to low-cost heap leach mining. These are some trench samples that we took over about a 6-kilometer strike length and some of the grades from this trench sampling. This is showing some geophysics lines that we took, covered about 40% of the property. This is the location of the drill holes that we did. So 11 drill holes that we did ourselves, and some of the results from this drilling. You can see some really great intersections highlighted in red. So Centerra will actually be on the ground again in September. They should have their permit in hand, their drill permit in hand, mid to late September. And the hope would be that they would be drilling somewhere towards the latter part of the 3rd quarter or the 4th quarter of this year. And our hope would be that it will carry on into next year. And just as a final sort of glimpse on valuation, I want to leave you with this. So if Centerra spends their 12 million Canadian to earn their 70% interest, leaving Mammoth with a 30% interest. If we never spent another penny on the project, we're diluted down to a 2% NSR royalty. Just another glimpse of that valuation. So what would that 2% be worth? Well, if we assume that Centerra were to achieve 1 million ounces of gold, then that is only 2.5% of this 5 by 3 kilometer area mineralized at only 0.6 gram per ton gold. At $1,600 an ounce gold, that would be worth $48 million Canadian. 1,800 gold, 51 million, 2,000 gold, 53 million. I'm not saying we're going to get there. I'm not saying we're there yet, but that's what that 2% royalty could be worth if we never spent another penny at Tenoriba.
Very good, Tom. Thank you. Now we will bring back Grant and Murray for the panel Q&A portion. And Murray, do we have you as well? Good, Murray.
I'm here, Mark.
So thank you, gentlemen. I know that I gave you 6.5 minutes, disappears very quickly, doesn't it?
Very
sure.
And given how time marches so quickly, let's go back in time and talk about your process in initially identifying and acquiring your projects. So why don't we start with you, Grant? Tell us about that process. And then we'll go with Tom and Murray in that order.
I'm having some trouble with the audio there. Could you repeat that?
Talk about your process in identifying and acquiring your projects.
And I'm up first, am I?
You're up first, then Tom, and then Murray.
Yeah, so Rockridge has 2 core assets. Our listing project for the company when it was listed a couple of years back was the Rainy Gold project, and that's our core asset now that we're focused on. So that project was held previously by a mineral exploration company. They changed business several years back, and so that project, Rainy, then went into a private entity, and Rockridge acquired the option on that from a private entity. Similarly, our other asset is the Knife Lake project, and we have an option to earn 100% interest in this asset. And this project was acquired by a well-known project generator, and we have a great relationship with the company, and we entered into an option agreement to acquire the Knife Lake project from that group.
Tom?
Yes. Well, look, it's always challenging to get a good project. We were fortunate with Tenoriba. It was a situation where the prior company had drilled the project, announced results in 2008. The global financial crisis came and they were unable to sustain it. We were introduced, while looking at another project in Mexico, introduced to this project by a geologist that was working with us on the project, saw the results from the historic work, and I mean, it was a pretty quick decision to jump into terms of an option agreement with the party. In fact, we liked it so much that there were some taxes due, and we actually paid $45,000 in back taxes on a letter of intent because we liked the project so much. So sometimes you just get lucky, and sometimes it's just a lot of work. So, it's a combination of the two.
I'm next, Mark. Yeah. Okay. Well, we had because of the success we had in the area right around Helena, we got quite a few property owners coming to us. One property owner knew Mike Gunsinger very well and told him the same story about these high-grade drill results that were drilled back in the mid-'80s. And Mike told me, well, Murray, he hasn't, the story's the same every year, so I presume he's not lying to me. So we sent Ben Porterfield down, our head geologist at RX, to have a look. And Ben was able to come across another adjoining claim block owned by an individual on patented ground that had all the necessary ground on the historic Custer mine, which, like I said in the earlier part, they mined 2,400 continuous feet. And the property had this nice database of 640 to 700 holes that we liked. So we were able to do a deal with the property owner on a lease basis at very low terms with a lease that goes to 2034 with an option to purchase the property outright for $2 million. So that's how we got involved there.
Very good. And the next question I have relates to how juniors function. You know, there's pressure for results, and there's also entrepreneurial spirit inside. And this results often in different exploration decisions than majors would perhaps take. So talk about a couple of your past decisions, and why don't we start with you, Murray, and then go Grant and Tom.
Okay. Yeah, thanks, Mark. Yeah, like I indicated in the presentation, I had Joe Caraba involved with us, and it was about 14 months ago. We had drilled what we thought was enough drilling there to maybe warrant going underground. Mike taught me to drill for structure and mine for gold, and he said, don't ever forget that, especially when you're dealing with narrow veins. So we had very good structure there over a strike length of combined of over 1,000 feet. But more importantly, what I wanted to do, or what we wanted to do, was get the same mining team back that we had at Drumlummon. There was a little bit of action in the industry. There was a couple of key people we wanted to grab. And in order to do that, we had to start an operation. So we decided, even though we weren't fully funded, to go underground. We drove a tunnel 900 feet roughly at a 1 degree elevation going down, and underground now we're starting to develop a test mining phase. We're on 2 veins right now, looking at a third one that we can start a bulk sample test mining program. And what we did was, which I think is a little different, is we leased a mill in the area. So we have our own mill that I didn't get a chance to talk about in the presentation. It's a 160 ton a day mill that we've leased for $20,000 a month and $12 a ton, and basically been rebuilt over the last 4 years with $5 million spent on it.
Great. Yeah, so I think for Rockridge, we're really focused on exploration of our 2 assets. So we're the early explorers. Typically major companies may not go quite down the pipeline to the very early stage projects and sort of rely on the junior companies to do that exploration. Both of our projects, I think the success is really driven by the drill bit. So we drill good results. We build value for the company, and that'll attract other companies, intermediates and majors, that'll often look then to joint venture with the companies that made the discoveries.
Yeah, Mark. As far as there's this serendipity and hard work to find a project, as we talked about in the prior question. As far as the difference between a major and a junior it's really, for me, coming from a finance background and geologist, it's return on investment. I'm just really cognizant of where the market is, how we're going to spend money, and are we going to get return in our share price, in our valuation, our cost of capital from our results. And that, so I'm always really looking at doing the work that's really going to give us results. And an illustration of that at Mammoth is that we did geophysics. We covered 40% of the property. Yeah, okay, you could do 100% of it, but let's do 40%. We got this big area, 15 square kilometers. Let's do 40% and see what kind of results we get from the drilling on that 40%. Because if we're successful on the 40% in the geophysics, it's something that helps us. Then we can expand it to the rest of the project. So it's using it's just being efficient with capital. That's, for me, it's really being efficient with capital.
Very good. Well, we're talking about capital, and let's start with you, Tom. Talk about the potential for a capital raise or the need for a capital raise in the next, the foreseeable future, up to 12 months, let's say.
Yeah, well, look, we do want to capitalize the company. We did a small raise that we closed in June. It was twice increased. Originally, we started off with 132,000. We ended up closing on 167. And that, but again, we're very cognizant of dilution and using our capital efficiently. We would like to raise some more money. We are out looking at other projects and that we're seeing some things that we think we can do transactions on, but of course, it costs money to enter into these transactions. So, I think we will do another raise, but we won't be doing another raise before Centerra is drilling. And that, and we've got something to announce because we haven't had a lot to announce prior to that point. I think that we'll see some good enthusiasm as we have this $5 billion market cap company prepared to start spending on the property and drilling. I would expect they're going to get the results, at least what we got. And I think there's the potential to start to see the first phases of a resource being built at Mammoth, and we'll look to raise some capital then. On that point, because Centerra is spending on the project, we don't have to raise capital. This is working capital money that should do us for the next, 2 or 3 years, hopefully with Centerra spending on the project. So there'll be one more kick, I think, to people to get invested in Mammoth. And after that, I think we'll be sitting around and waiting to see what happens at Tenoriba or what happens with another project that we might acquire.
Murray.
Yeah, hi, Mark. We're just finishing off raise 0.8 million. We're actually oversubscribed right now. It's problematic, but a nice problem to have, especially and these guys know what the market's been like for the last 4 years. It's been a very, very tough slugging, but we're right at the stage where we're going to be starting a bulk sample test mining program. So I think it's pretty exciting that we have that underway with our mill, and our miners are actually underground. We're operating eight days on, 6 off, because we haven't been able to afford from a capital standpoint to have everybody working 7 days a week. But we've got 2 shifts running, and it's getting pretty exciting. And we've raised this money, and I think we can have some gold coming out maybe in September, October. We're planning on starting the mill up, bedding the mill in September. We've got enough low grade sitting on the ground, muck piles, to actually start the mill up and bed it in and see how we do there, and some high grade coming behind that.
And for Rockridge, we're fortunate to be fully financed here. We have approximately 1.7 million in the treasury. We did a private placement financing just not long ago. So our rainy program is the first step of the program here is about a $500,000 drill program for 3,000 meters. With success, we'd have plenty of resources then to follow up on that. And then with our other asset, the Knife Lake project, we could look to get into that and do some planning for further assessment of that project later in the year and early into next. So for the next 12 months, we're really well positioned with regard to cash to advance our assets.
Well, it's good to hear from all of you. My penultimate question is that for all of you, when you're doing your screens to decide which targets to test, there are some that almost make it that you decide are not the priority, so they become a secondary target. Could you tell us a little bit about some of the targets that aren't high and top on the list, but you might turn to at some point? And Grant, let's start with you.
Yeah, so that actually is quite applicable to our Rainy Gold project. When we first went into this to do the first drilling on this project earlier in the year, we proceeded that with a real good assessment of all the historic data. And we didn't have a good handle on the geologic model until we sort of went through that process and into the first drilling. And out of that then comes priority drill targets. We focused on those with the first drilling, and then we went into the field last July to further prioritize based on our new knowledge, the results of that first drilling program, and then combine that with the field program data. So what we've come up with at our Rainy project now is a revised geologic model that's quite different from what the early drillers and explorers thought in this area. And really, we're testing this new model now. We've got a high-grade gold zone over about 225 meters identified. And now the chore is to follow that along strike, and we think we have a great idea on how this sits together. So the priority target area is defined. And, you know, as you go through these projects, you learn more and more with every drill hole. So you may reprioritize based on current knowledge.
Who's
Tom?
next? Okay. Yeah. So look at our decision on targets. Well, it's not our decision. It'll be Centerra's decision. But what we have in the process that we've seen Centerra undertake is that, you know, we've got 2,600 soil samples over this 50 square kilometer area. We've collected over 600 chip samples. We've got trenches. We've got geophysics on 40% of it. We've got 26 drill holes. Every phase of that, you'll learn more and more. And as you learn more, you start to look at what you can do to manipulate that data to have a better and deeper understanding. And so Centerra has been doing that. We've seen a little bit of some of the outcome of that. And so they're getting, you know, their other ideas of where there's potential. Look at every drill hole that we've hit, very few of them have we done step outs on. And we've tested over a 4-kilometer strike length. So there's lots of opportunity. Time will tell, because we'll learn more of what Centerra's intentions are. But right now, they're still on the data collection and manipulation of all of that data to identify their targets. But I mean, I look at, we finished our drill program with many targets, stepping out on all of the intersections that we had to further extend the mineralization that we encountered. So all of that stuff is open, and it's still open beyond the 4 kilometers that we explored, up to 6 to 8 kilometers of strike length. So there's a lot of targets to explore.
Murray?
Hi, Mark. Yeah. We've concentrated on 2 veins, the Block 93 in parallel, and we're underground developing those right now. But it's not really a target we want to leave alone too much. It's the biggest target on the property. It's the Custer mine, which they stope continuously for about 2,400 feet. And we haven't, because of the topography, we haven't been able to drill it too successfully just because of the length of the holes. We didn't want to. But now that we're underground, we think we can get over in that area with underground drill stations and get back at it. And that's an area we're really, really excited about. Not so much as a secondary or third target, but just one we haven't been able to get to because of the structure of the thing and the fact that it historically produced a large amount of gold out of very few tons. So that we're really excited about getting over there.
Very good. Well, gentlemen, we really appreciate you being with us, and I'd like you to each take 15 seconds to a closing remark. What do you want to leave folks with at the end here? Grant?
Thanks. So I think Posing Rockridge has 2 core assets. Our current focus is our high-grade gold project. It's in a great geologic setting. And our value driver is really new discovery at that project. And we think with discovery, we should certainly see re-rating in our stock price.
Yeah, well, look at Mammoth hasn't had a lot of news over the past year, but we're finally at the stage where we anticipate drilling, towards the end of the 3rd quarter, the 4th quarter of this year. And, we've hit potentially economic intersections in the vast majority of the holes drilled over a 4-kilometer strike length, and it's open in all directions. I don't think we were just, so fortunate and we're so smart that we hit everything that exists there. I think there's lots of potential, and look forward to the results coming up shortly. And valuation, I mean, for 1.8 billion or 1.8 million, and the project's had 5 million Canadian spent. We're not getting value for what's been spent on the property, and we've got these good results. So I think there's a great opportunity for good return.
Hi, Mark. I guess what I'd like to, congratulate the other 2 guys on being on your show today. Very interesting stories indeed. I think what I would like is that we're maybe pouring an ounce of gold or 2 back in the months of September, October. So I'm really excited about that. That actually we'll get some actual physical gold out of the ground and be be actually a gold mining company. And thanks for your time.
Congrats on that one, Murray. That's great.
Thanks.
Yeah.
Thanks, Grant.
Excellent. Well, thank you very much to our presenters. May you have success in the field while the decent weather holds. So we had Grant Ewing, Rockridge Resources, Tom Atkins, CEO of Mammoth Resources, and Murray Nye, CEO of Winston Gold. And to you, our attendees, thank you for your time today. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. Be determined in your due diligence and ask tough questions. We'll be back August 19th with our roundtable discussion, and every Wednesday thereafter into October for more Mining Mania. This is Mark and Raj signing out from TakeStockLive.com.
Thanks, everyone.